34 is where we are after 15 seconds. Ashley Webster is here, Liz McDonald too, Todd Horowitz and Jack Howe. Stocks, yeah, they're pulling back, but we've had a 5-day run-up. First of all, Jack, to you. China's exports down 25%, imports down 13%. More weakness in China. Is that part of the reason why we're down this morning?
It's part of it. Look, the first number I'm not that concerned with. There's a lot of junky manufacturing activity that's been going on in China for a long time that has not produced a profit. So if their exports are plunging, that's just them getting rid of some of that business they were never making money on to begin with. The problem is we were making money on that garbage business they were doing because we were selling them machinery. So as their exports plunge, their imports also come down a bit. They don't need to buy these big expensive machines from U.S. companies, and that's ultimately going to hurt some of our industrials at the fringe.
Todd, come into this, but it just seems like it's one of those factors.
There it is.
We just tipped in.
Now we're below.
You interrupted me. I'm in full flight.
I got excited.
I'm
so sorry. I got excited.
Deep breaths to reset.
Yeah. What did they say to Trump? Breathe.
$16,995
Do yoga.
$16,995. Want to come into this again? Can't even keep control of my own set here. Todd, in Chicago, the voice of reason, please. Are we down this morning because China's exports are down 25% and their imports are down 13%?
I do not think so. Good morning. I think that what you have here is, you've said it yourself, we've had a 5-day rally. The markets have rallied almost 10% from the bottom of February 11th. At some point, somebody's going to take a profit here. I think you're probably seeing a little bit of profit taking, the excuses being what's happening in China. But the mess in China has not changed. China's in a lot of trouble. They've got more issues to go for. So this is not, in my opinion, has nothing to do with it. It's simply a little profit taking, debating on where we're going to go, and we did come back below 17,000, thank God.
See, the voice of reason, right there. The man in Chicago, the voice of reason for everybody. How about the price of oil? Big deal yesterday, moved way up, about $38 a barrel. This morning it's $37.47. It's down about 1%. But listen to this. Goldman Sachs says the recent rally in commodities is not for real. It's just a short little hop up, and we're going to come down again. Jack.
I agree with that. What has dramatically changed? I mean, we're still oversupplied. I don't see any, dramatic
all
increase.
Commodities, copper included, and lead, and all the rest of it.
Yeah, I don't see any dramatic increase in demand. And
but that's bad news for the stock market.
With what's going on in China, you would expect that this rise would be iffy for some of these commodity prices.
Okay, the voice of reason. Come back in again, Todd, in Chicago. What do you make of Goldman Sachs? All these little rallies that we've had in commodity prices going nowhere, they say.
I think Goldman Sachs is looking to be a buyer. I think they realize that the bottoms are actually now in and that they're looking to push them down a little bit. That's a typical play from Goldman Sachs, because if you look at their books, they were actually long all going in. I think that they're looking to push prices a little bit lower so they can start buying down here. I think we've seen the overall bottoms, and they're looking for opportunities to get and accumulate bigger positions to go up.
It's all technical inside the market. That's what it is. You guys are really messing things up.